The S&P 500 is probably, it's about 100 points higher than where we thought the high would be, which was toward the middle point of the year. So it's done better than what we thought. I would argue that just the last 25 points of the S&P's move up has been tied to optimism over this tax situation. But based on that, and we don't have a lot of faith that we're going to see a meaningful tax cut that's really going to push ahead an $18 trillion economy anytime soon. Barring that, it looks to us like emerging markets, developed markets, they both have, if you looked at the EFA index or the emerging markets index, they probably have a little bit more upside, not a lot more upside, but more upside between now and the end of 2018 than U.S. large, mid, or small caps.
So 25-point tax cut premium. Jim, would you agree with that? Is that embedded in the markets right now, or is anything embedded in the markets?
I don't think so, Melissa. I mean, I think the tax cut, the final version that we're going to see, is certainly not the version that we're looking at right now. We're already debating whether or not the state and local taxes are going to remain in there. I think what you're actually seeing behind the scenes are these underlying fundamentals of really what is a globally synchronized economic recovery. Of the 45 economies followed by the OECD, 100% of them are growing for the first time since the global financial crisis, and 75% of those are actually accelerating. So I think the underlying picture here of this kind of global growth, that's really what's driving things. That's what's kind of keeping the market moving higher. It's why we expect the market to continue to move higher into year end, and also providing a little bit of a tailwind for higher rates across the globe.
Hey, Scott, it's Brian. I'm curious, you were talking about emerging markets doing well into the end of the year. Let's look forward to 2018. We have potentially a stronger dollar. Maybe money's coming back here to the U.S. What is your outlook going into next year if I'm trying to have a portfolio getting ready for 2018 on emerging markets versus developed markets, let's call it the U.S.?
Yeah, Brian, I tell you, and remember, now we think we're going to have some pullback here over the course of the next 4 months or so. Let's say a 4 to 6% pullback, something like that. But going into year-end 18, which we have our year-end 18 targets out there, from the point that we're at right now, all in emerging markets, maybe you're looking at, let's call it a 3 to 5% type of return, maybe towards the lower end of that range. Probably somewhat similar if you looked at the EFA index or something like that. So, our work, the bottom line is net from where we are right now through year-end 2018. I think we're going to see some volatility more than we have in the last year. But the net gains from here to the end of 2018, I think are likely minimal.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.